Hi there, my name's Chris Cam with Aspermont and MiningNews.net, and with me I have Guy Keller with Tribeca. Guy, I wanted to start off by asking you about Tribeca's involvement in uranium. It's been a sleeping giant for a long time. What actually prompted Tribeca to start the fund?
Yeah, thanks, Chris. It was a really good question. I joined Tribeca about 7 years ago. I'm part of their global natural resources business. Part of that was to look at all the commodities, as what we do in global natural resources. I looked at pretty much all of them, and uranium was sort of hanging out there as on the to-do list. Ben Cleary, who runs our business, said, "Look at uranium." I said, "Oh God, it's been one of those markets that just disappointed." We looked at it, and from a fundamental perspective, and obviously it was a broken market. The prices have been stupidly low as a result of Fukushima in 2011. But we just noticed some really subtle changes. China coming back to the market, and I'd spent plenty of years of my career trading commodities where China was a big part of those commodity markets. So that was coming back. There was a push for decarbonisation, ESG, which we're exploring, where nuclear have nations were realising that nuclear power actually solved that with baseload 24/7 carbon-free electricity. May as well keep it on. And then we started looking then at the future as to what was happening, and there was more countries wanting to build nuclear. So as I said, we started investing in our global natural resources platform. It was a very small sector. We realised that we were going to be substantial shareholders in everything we touched. So we rolled out the little satellite Tribeca's nuclear energy opportunities. Spent 2 years in the wilderness, learning a lot from a pretty beaten up sector and lots of CEOs who are very happy to welcome an institutional investor. And then it sort of started kicking in 2020, got a little pulse, but more recently it's starting to become much more mainstream and getting a lot more global attention and mainstream media attention as well.
You mentioned you learnt a lot in the process, and the market or the investor community is starting to learn more, helped by a sub $30 a pound price going through $100. What do you think remains the most misunderstood about the fact about the uranium market within the investor community?
I mean, there's a lot of biases around nuclear power to begin with, although those are changing very, very quickly in the world ex-Australia. But there is also that belief that uranium, there's a lot of it around, that supply will solve, that it's going to be like last cycle where it runs up very quickly and then it runs back down because all these mines turn on. And that's where it differs to last cycle. The demand is increasing as opposed to flatlining or decreasing last cycle. But last cycle, there was a wall of supply. The main part being the Kazakhs. The Kazakhs are now running basically as hard as they can, and they're probably going to be year on year flat to down at a time where we've got $100 prices. So that, I think, is a big misconception, that it's not going to be easy for supply to respond. So prices will stay higher for longer because they have to encourage that supply to come.
Okay, and looking more generally, with a bit of a uranium bent, but what are you expecting just in 2024 for general investment trends in the resources space?
Yeah, it's going to be really interesting. I mean, obviously we've seen the iron ore price roll over recently. It was sitting up at sort of $125, $130. It's now back at $100. That's been interesting because a lot of investor money has been hiding in the likes of BHP and Rio. It's like we're invested in resources because we're sitting in large cap iron ore producers. Some of that's shaking out recently, and so it's looking for other homes. So you're seeing, eyeballs looking at resources. So copper, it's pushing up through $4 a pound. There's interest there. People want to own copper. Gold's starting to get a bit interesting. And we've had a little sort of rollover in the short term in uranium, but we've just had a rebalance in the ASX where there's another 3 uranium stocks added to the small ords. So there's now 7 uranium stocks that small cap fund managers need to look at just to make a decision on their index weight. So they just need to buy that. Probably 4 to 4.5% now of that index will be uranium. 15 months ago it was 0. So there's a lot of education that needs to happen there. And so I think you'll continue to see flows into the ASX uranium names that may, outpace some of that in North America as the small cap fraternity catch up. And also more broadly, I mean, I've been on record saying I think uranium can get to $175 this year. As I said, it got to 106, and now it's sort of 87. The question is, people say, what can drive it there? My question actually is, what's going to stop it getting there? And so, I think it will be a higher price over this year that should encourage more activity and more eyeballs in the space.
Okay, and finally, Guy, what are your thoughts on the conference so far? What are you hoping to get out of it, and what have you seen that you've liked?
Well, I mean, you've had some good speakers, and I had a walk through the room there earlier today, and there's some companies that wouldn't normally be on our radar, but we know who they are, but it's been good just to sort of see where they're at and what sort of level of interest they're doing. It's good to see a handful of uranium companies here at the conference as well, and so it's great to be able to just, as I said, wander around and just say hello and see what's happening with a few of these companies that you've got here.
Thanks for your time, Guy. Cheers.
Thanks for having me.